morning, Sean. Welcome. Another week has flown by.
Morning, Bobby. Yep, another week, another whole bunch of news in the world of crypto.
Yeah. Well, I actually want to be a little bit topical and say, obviously with the chaos that's happening in South Africa, one of the things that has been playing on my mind a lot is something we actually touched on last week, which is decentralization. And I wanted to kind of, maybe bring to the fore, like what decentralization means in an economic climate that we are seeing in South Africa at the moment.
Oof, yeah, you've thrown a question my way. So
yeah, I told you I was going to throw a curveball.
If you think about the benefits of decentralization, it's that you don't have any single point of failure, and you also don't have any central authority that says something can or can't happen. And in South Africa, I think if you're looking at the chaos that's ensuing with all the riots and protests and all the rest, I mean, I don't know if there would be a argument for decentralization on that front. I mean, it's kind of hard to see how it would fit in there. But I think there's a really good case to be made to say, listen, maybe some of the systems we have in this country, which is really the underlying sort of first principle cause as to why people are actually rioting, they need to be improved. So I think one area that you're going to probably hear me just come back to, I like that guy at the dinner table that doesn't like the US, or that is like, I don't know, got some ridiculous political view, but I'll always come back to this. It's like exchange controls in South Africa. The fact that we've put this entity in between the citizens and businesses of this country and the rest of the world, this entity being the SARB, and saying, listen, all money flows have to essentially be permitted by them. Like, to me, that's mind-blowing. I don't understand. That's like the polar opposite of free movement of capital.
Yeah.
But anyway, like getting beyond that point, having something like that that's a bit more decentralized, so that no one can say, listen, you can or can't do this. And it's more just a case of let there be a free market and let things operate. That's quite attractive. And it's not just a free market perspective. Decentralization also means you've got information stored amongst multiple parties. It's a lot more difficult to corrupt it. And that's really, I think, the main point that we should be focusing on in South Africa, is you've got land registries, which are currently held by a single, and I mean, sure, it's probably backed up across multiple servers, but by a single point of failure. You've got banking records. I mean, while banks maintain your records, I mean, we know banks get hacked. So perhaps having a shared ledger-like approach on that front would be quite attractive. The other thing is we still think of money today as sort of being this paper thing with kings and queens and, in our country, animals on. But in the future, that's all digital, right? So when you're looking at digital money, perhaps as a government, maybe if you're issuing money to a certain, I don't know, tender, or like somebody that's, going to be working for government, or even social grants, it would be nice to potentially know where that money's gone, at least, maybe after the second or third transaction. And you could program that into digital money. So you could know exactly where that's been spent, and you could prevent it from going to certain areas. So that's quite attractive as well.
Yeah, I mean, those are all great use cases. And I'm just kind of going back to the theme of what we've been witnessing also, is like when you look at the Venezuelans of the world, where, government policies have completely eradicated the value of a currency. And we just have to look up of the border in Zimbabwe and what happened there when they started printing and had hyperinflation. And, we're looking at what's happening in South Africa, and you're going, well, geez, the Rand has been bombing out in the last couple of days, mostly due to the fact of what's happening, and being able to sort of have your money sitting, outside of that realm, seems like a safe haven almost for a local investor, right?
Yeah, I guess, people moving into, let's say, USDC coin, or moving into stable coins that are backed by dollars, potentially euros, any other sort of hard currency, if you want to call it that becomes incredibly attractive. That's actually something that we've recently launched on Revix, and we've got USDC as a standalone product that you can invest in, which is one for one backed by US dollars. And then you've got the beauty that you're not using your discretionary allowance. In South Africa, you can only move up to R1 million offshore before you have to apply to the government to move a little bit more. So that's between 1 to 10 million. You don't have to make use of any of that. So you can literally, if you wanted to invest 30 million Rand, I mean, we'd love that to happen, but that's probably not going to happen. If you wanted to invest 30 million Rand straight into USDC, you can do that, and you've got direct dollar exposure. And in the future, we're launching a variety of savings products that allow you to get a dollar-based yield. So you can earn, just like a savings account, a interest rate every single month that's actually equivalent to South African rates, but in dollar terms. So you're looking at making more than 7% per year in your dollar account, which is quite attractive.
Yeah, that is
amazing.
We
went on to a complete product pitch there, but I think it was still along the same terms.
No, but it's fantastic. We've seen those kind of products come onto the market overseas. It's definitely where people are taking the whole cryptocurrency. It's the trend, being able to, earn yield on your crypto, which is fantastic. I mean, this is what scares me a little bit about people that are unfamiliar with what's happening in the crypto space, is because there are these advances, and you can make these sort of advancements in a personal capacity, and people are just not aware. There's this massive education gap, or knowledge gap, let's say, about what's happening and what's already happening in the crypto space, which is super exciting. And it's cool to see that Revix are kind of at the forefront in South Africa on doing this. It's, kudos, well done.
No, thank you. I mean, it's incredible actually, because you've still got a lot of people that are still trying to wrap their heads around what blockchains are.
Exactly.
And like why we should ever think of some sort of digital currency that's like monopoly money, that's not physically backed. And like, don't get me wrong, there's always going to be people kind of like, starting their journey in the crypto space. But then you've got people that have been in here for 6, 7, 8 years plus. And, even if you haven't been in that long, you start to understand with DeFi in particular, decentralized finance, that all of a sudden, wow, you don't actually need to have this bank in this big shiny building doing things for you. You can have a computer program. And that's incredibly powerful. That's probably going to be one of the biggest movements, I think, happening over the next 5 to 10 years, which is this movement from physical banks to more programs or programs/protocols that are going to be managing things.
Yeah, I mean, it's a mindset. It's a shift that a person needs to take. I mean, I'm not going to go tell my folks about a blockchain and how they should put their money in it. But, for the younger generation that are slowly will welcome, that there's the software, there's this digital space where things live, we don't, I mean, you can't buy a computer with a CD anymore, it's all sitting in the cloud somewhere. So we're all making that shift towards this digital space. But I wanted to kind of also just touch on the price action. I mean, it's been relatively calm, I think less volatile. But if you look at the graph, you can definitely see there's a very distinct wedge forming, and the lower highs are constantly being made in, and there's a call that it's going to go down to the 20K mark. Now, I don't want to sit here and sort of do predictions and stuff. I mean, it's very useful to understand how a graph works and what you're looking at. But I wanted to get your intake or input on Rand cost averaging, because I think that is something that someone needs to really understand. It's something that I learned over time. Do you just want to kind of explain how that works and how it will benefit someone investing over time?
Yeah, sure. So Rand cost averaging, or dollar cost averaging as it's more commonly known, is really just investing a set amount. So call it at 500 Rand or 1,000 Rand plus every single week, month, year, however often you want to invest. And what that means is that you get the average price over a set period of time. So the average price of Bitcoin, or even if you're doing this with stocks or any other asset that you're purchasing, you get the average price over a period of time. And provided over the long term that this asset increases in value, you've got an average price that's going to be lower than the price it'll be in the future. Now, the big benefit with this is it sort of takes the air commas guessing game out of investing, because you sort of have this execution strategy, and execution strategy sounds fancy, but it really is that. It's just what hedge funds and a whole bunch of other big players do. And you actually want to enter this investment over a set period of time, and in the future you believe this is going to be high in value, so great, you've got the average cost. I think a big downfall of dollar cost averaging is that it isn't as fun. And this is something that people don't really talk about as much, because people want to invest. They like the thrill. There's this entertainment component of investing / trading. And unfortunately, I mean, while we are trying to make investing as engaging as possible, like some of the best strategies are just a bit boring. I mean, like that's just part and parcel of, dollar cost averaging and, a whole host of other strategies, diversifying a portfolio. Like, no one wants to own this really like non-volatile asset that doesn't have that high of a return, but diversifies your portfolio, right? But you should be owning that.
Yeah, but the beautiful thing is that if you're just a bit patient, you give it time, and you dollar cost average or Rand cost average, you'll be smiling in a couple of years. And I think that's the big thing. Why I wanted to bring it up is obviously, going back to, what's happening in South Africa and like watching your Rand go down and everything like that. I mean, at the end of the day, if so many people have said to me, it's too late, I don't want to go in, it's too late, it's too late. I'm like, it's not too late. And people have been saying it's too late to get into Bitcoin, it's too expensive. And I keep saying to them, like, it's not, it's actually still cheap. And, if it does break the 30K mark and it goes down to 20, fantastic. There's your opportunity to Rand cost average and get in. It's never too late. That's actually the sooner the better.
Oh, definitely. I mean, from my side, it seems like a no-brainer. Obviously, we're really deep in this, so we're super biased. But it depends. If your longer term view of this asset is that it's going to increase. So if you say to yourself, no, there will be $1 million Bitcoin one day, within the next, say, 5 years. Of course, like dollar cost averaging now means that you're probably going to be seeing a 2.5, 3x return. Like that's incredible. And that growth doesn't happen overnight. It happens gradually and then all at once, right? I mean, you generally see the top 10, 15, 20 trading days account for 95% of the gains of a particular asset. You just don't know when those trading days are. That's why the strategy of saying, listen, enter regularly and, with a set amount is a smart way to go. And again, it just removes that emotion, right? So you don't need to feel like you need to buy when the prices just tank through the floor, like they go super high. You just got a time period that you enter.
Yeah, exactly. I mean, they keep saying you can't time the market perfectly. I mean, you can maybe get it right once or twice, but to think that you can do it every time is you're just shooting yourself in the foot. It's that you're just going to get disappointed at the end. And I think another topic that we can talk about very quickly to finish off, because, as time always runs away from us, but the risk to reward, right? So that's also a big concept people need to understand when investing, whether it's investing in the all share index in South Africa, the S&P 500 in overseas, or in cryptocurrencies. So do you just want to explain the risk to reward concept and how we see it sort of in the crypto space?
Yeah, sure. So I think it's very important. Everyone understands reward, right? You make money. That's simple. People battle to understand risk because there's so many different elements of risk. There's losing all your money. That's the one type of risk. There's the price volatility that happens with certain assets. And that's a different kind of risk. And that's probably the most not necessarily most well understood, but certainly the most well-known risk as well. So crypto is very volatile, therefore it's very risky. There's other sorts of risks like environmental risks when you consider investing and stuff, but we're not going to consider that for the purposes of this discussion. But for most people, you need to say, listen, how long am I looking to invest for? If I'm willing to invest for an extended period of time and I don't need to touch this money, you can probably take a little bit more risk. That's sort of the general understanding in the market. And that's really what you have to come to terms with. You have to say, listen, if this asset, because crypto, like if you invest, I mean, even now, it can go down 70 or 80%. Like, I don't think the probability of that happening is very high, but it can do that. Are you okay with taking that loss? And the are you okay sort of standard would be, are you going to lose a ridiculous number of hours of sleep if this was to go down? And if you are, then you're probably putting too much into this asset class. Now, if this was to go down, 50%, are you okay with it? 20%? And there's different asset categories that you would look at. So let's say, stocks as an example. Now, we saw one of the biggest drawdowns, when was it? It feels like a lifetime ago, but in 2020, when the stock market in the US and globally sort of tanked with the start of COVID. Now, that was one of the biggest drawdowns that we've ever seen. And that was a 40% pullback in the stock market. Over a very short period of time. Now, for a lot of people, if you've invested your life savings into the stock market, that's gut-wrenching stuff, right? All of a sudden, you've seen nearly half your wealth wiped out. Other asset categories like property, slightly more safe, bonds, a lot more safe. So you start looking at all these areas. And for some people, like they don't even know that these things exist. That's why we come in at Revix to hopefully make people understand, listen, there is all these different categories that you actually, as an everyday person, can invest in.
Exactly. No, I like that, and we definitely need to start touching on these themes that you guys are releasing, because I love the concept. Looking at that risk to reward. But I think what's great about what you guys are doing is that you're looking at the longer time frame. So looking at what the impact of electric vehicles will be. But let's park that. People need to stay tuned and watch out for when we do talk about that. But I think today's episode, Sean, thank you so much. I think absolute gold and very important concepts to understand. And I think especially when we look out the window or switch on the TV to understand how this impacts our daily lives.
Oh, brilliant. Glad I could help. Thanks, Bobby.
Cool, man. All right, Sean. Well, we'll see you next week.
See you next week, man. Adios.
Cool.